Hi, I'm Michael Yardney, and 2013 is turning out to be a good year for property. The cycle's moving on, and as growth returns to our markets, memories of the last few difficult years will fade. However, it would be a pity to have lived through the challenging times we all experienced in the last few years without learning some lessons. We don't want to repeat the same mistakes and the same pain. So what did you learn from the recent property downturn? Probably the most important lesson we can all learn is never to get too carried away when the market's booming and not to be too disenchanted when property slumps. Letting your emotions drive your investments is a surefire way to disaster. So to ensure you never get caught again, let's look at 5 big lessons from the last few years. The first lesson is neither booms nor busts last forever. During a boom, everyone's optimistic. They expect good times to last forever, just like we lose confidence during a downturn. Our property markets behave cyclically, and each boom sets itself up for the next downturn, just like each downturn paves the way for the next boom. Let's face it, while the news is much more positive today, we know over the next few years the buoyant market conditions will be followed by another bust, and then another boom. And over the next decade or so, we'll probably have another recession, and we're most likely to have another depression one day. The lesson from all of this is that even as you take advantage of our rising property markets, get prepared for the next phase of the property cycle. During the last cycle, most investors didn't really have their downsides covered or their upsides maximised. The second lesson I'd like to share with you today is beware of the doomsayers. As long as I've been investing, and that's close to 40 years now, I remember hearing people with excuses why property prices would stop rising, or even worse, they came up with all these reasons why property values would plummet. However, in that time, well-located properties have doubled in value every 8 to 10 years. But fear is a powerful emotion, and one that the media uses to grab our attention. Sadly, some people miss out on the opportunity to develop their own financial independence because they listen to the messages of those who want to deflate the financial dreams of their fellow Australians. The third lesson I'd like to share with you is that you should follow a system. Smart investors follow a system to take the emotion out of their decisions. It also ensures they don't speculate. Look, it may be boring, but it's profitable. Let's be honest, almost anyone can make money during a property boom because the markets cover up all sorts of mistakes. But many investors without a system found themselves in financial trouble when the market turned. Warren Buffett said it succinctly. He said, "You only find out who's swimming naked when the tide goes out." In other words, if you aren't following a system that works in all market conditions, you're going to be caught naked when the market changes. If you prefer to have consistent profits and reduce your risks, follow a proven system. Make your investing boring so that the rest of your life is exciting. The fourth lesson I'd like to share with you is getting rich quick usually ends up getting poor quickly, I should say. So getting rich quick is sort of like getting poor quickly. I guess what I'm talking about is that real estate's a long-term investment, yet some investors chase fast money. Look, you've probably met people like that. They look for that deal that's going to make them fabulously rich. When you see them a year later, they're usually no better off financially, and they're still talking about that next deal that's going to make them rich. They're often influenced by the latest get-rich-quick artist with a great story about how you can join them becoming stupendously wealthy. Their stories can be very compelling. I know, they're hard to resist sometimes. They often pander to the wishes of people who'd like to give up their day jobs to get involved in property full-time. But in reality, it takes most people many years to accumulate sufficient assets to do this. Patience is an investment virtue. Warren Buffett said it right when he explained that wealth is the transfer of money from the impatient to the patient. The fifth lesson I'd like to share with you today is that it's all about property. You're in the business of property investment. Yet during the last boom, many investors forgot that age-old fundamental of buying the best property they could afford in the proven locations. Instead, they got sidetracked by glamorous finance or tax strategies, or some lost out. Smart investors do it differently. They make educated investment decisions based on research, and they buy a property below its intrinsic value in an area that's always had strong capital growth, and then they add value creating some extra capital growth through renovations or development. Now, these are just 5 of the many lessons that I trust you've learned over the recent property downturn. We know that in some regions the pendulum swung too far in the positive during the last property boom, driven by fear and greed, and swung too far in the negative in the downturn, again driven by fear. So if you learn these lessons from the downturn, it's going to help the roller coaster ride. It's not going to be as dramatic next time. It won't let your emotions drive your investment decisions, because both fear and greed will drive you down the wrong path. So promise yourself that as the property market picks up, and it's doing that already in front of our eyes, you won't get too excited. Then when the next downturn hits, and you know it will, you can just confidently smile because you learned the lessons that this last downturn has taught you. And then decades from now, you're going to be able to tell your children and your grandchildren that you survived the big property slump after the global financial crisis, and that it taught you some great lessons. So what are you going to do about all this now? If you're interested in securing your future through property investment, now's probably a really good time to get in the property markets. They're moving before our eyes, aren't they? And if you're looking for independent advice, no one can quite help you like the independent property strategists at Metropole. Remember, the multi-award winning team at Metropole have no properties for sale, so their advice is unbiased. Whether you're a beginning investor or a seasoned pro, we'd love to help you formulate an investment strategy, or just review your current investment portfolio and help you take the next steps, help you move to the next level. So why don't you give us a call at Metropole on 1300 20 30 30. When you come along to the offices at Metropole, you'll receive a copy of my latest 2-DVD program, Building Wealth Through Property Investment. That's valued at $49, but if you come along and have a portfolio review or have a chat about your own position, you'll be able to get that as my gift to you. Of course, I'm going to keep you updated on how to take advantage of what's happening in the property market with my regular market updates at propertyupdate.com.au.